Hello, good evening, everybody. Welcome to How to Trade Natural Gas using binaryoptions.com, presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. The live session today, we are going to cover how to make money trading natural gas. We'll be looking at using fixed odds trading to maximize our profits. We'll be covering live trading, looking at some trade setups today, and we'll, of course, be answering any questions you may have too. Why we trade commodities? Well, very simply, commodities have made us the most money in the fastest time. You can make money regardless of whether the price of commodities move up, down, or sideways. You can make money from a low deposit. All the profit you make is 100% tax-free. And, of course, you can make money at any time from anywhere in the world that suits you. Before we start, a little bit about myself, the Nick Kelsey, and the Gold and Silver Club. I'm Phil Carr, professional trader, trainer, and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, copper, natural gas, oil, and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications, speaking at numerous trading seminars, webinars, and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst, and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset, tools that give any individual the definitive edge to trade in any economy, and also regularly writes to a number of global business and financial publications, and we've appeared frequently on financial television. So that's a bit of background on the Gold and Silver Club. So why we trade natural gas and why you should be interested in natural gas? Well, essentially, there are a number of factors which influence the price of natural gas, and a number of very predictable moves that you can get in natural gas. So first of all, the factors that affect natural gas prices, well, natural gas prices are very closely aligned to that of crude oil. Over the past few years, natural gas prices have been on an upward trend with crude oil prices, and we've certainly seen this during the past week as we've had breakouts on WTI, crude oil, Brent crude oil, and natural gas as well. We've had some huge moves. So we'll take a look at that very shortly on the charts. Natural gas is also affected by the US economy. So the state of the US economy in general can have a considerable effect on the demand for natural gas, particularly from the industrial sector. So when the economy is expanding, output from the industrial sector is generally increasing at a similar rate. When the economy is in recession, output from the industrial sector generally drops. Weather as well, so natural gas demand typically peaks during the coldest months and tapers off during the warmest months, so with a slight increase during the summer to meet the demands of electrical generators. The weather during any particular season does have an effect on the cyclical demand of natural gas, and the colder weather, definitely more recently during the winter, has a pronounced effect on natural gas. So it's driven a lot by seasonality too. We've seen this especially recently with the very cold spell in the US. So in fact, today's headline news was propane markers tightened further on the cold weather. So with the onset of severely cold weather seen over the past few weeks in the US, propane supplies in the Midwest are extremely tight. So the Midwest spot price of propane at Conway, Kansas has spiked far above the Gulf Coast spot price and in Texas, and the high propane prices in the Midwest are the result of both increased demand for crop drying in November and increased demand for space heating in the current cold weather. So that has had a big impact on the price of natural gas recently. The reason why propane does affect that, well, propane is a 3-carbon alkaline, normally a gas, but compressible to a transportable liquid. So it's a byproduct of natural gas processing and petroleum refining, and it's commonly used as a fuel for engines, oxy, gas torches, barbecues, portable stoves, and residential central heating. So that's had a big effect on natural gas recently. Also, the natural gas storage reports that came out today at 3:30 p.m. GMT. This has an effect, a very tradable announcement every single week on a Thursday. The Energy Information Administration publishes a gas storage report every Thursday, and that data measures the change in the number of cubic feet of natural gas held in underground storage during the previous week. So today we actually had the inventories come through, and the natural gas inventory, before I go back to that, just how they're measured. Essentially, natural gas, the way it's measured is the energy content of natural gas and other forms of energy is measured by the potential heat that can be generated from the fuel. So it's measured in British thermal units. So quantities of natural gas are usually measured in cubic feet. So, for example, a typical natural gas futures contract is a financial instrument based on the value of 10 million cubic feet of natural gas. So here are some frequently used units for measuring natural gas. So 1 cubic feet equals 1,027 British thermal units. So to put that into context, you need 1,000 cubic feet of natural gas is approximately enough to meet the natural gas needs of an average home. So for space heating, water heating and cooking, etc. So today the natural gas storage inventories came out. They came out as minus 107 versus the forecast of minus 110 British thermal units. So that actually caused the price to go down. They expected more of a deficit in natural gas, and there was a bit more available than expected. So that made natural gas have a little bit of a retracement and a pullback today, this afternoon. We'll take a look at that too. And finally, natural gas is very seasonal. So natural gas, we've certainly seen this move to the upside over the last couple of weeks or so. We've seen some breakouts. Actually, just yesterday, we had a really big breakout. This time of year, we do expect some big moves to the upside of natural gas, particularly over the colder months, as you've seen in the US very recently with the freezing weather they've been having. This has caused a bigger demand for natural gas. So it's very much a seasonal trade as well, and that makes natural gas predictable, especially during the winter months where you want to be getting ready for a breakout as we get rallies to the upside. So we'll take a look at that on the charts very shortly. Before we do so, I'll just talk you through the top trade of the week on natural gas this week, which was in fact yesterday. We had a breakout. We actually broke above a significant Fibonacci level, which we outlined on last week's Commodity Corner on Friday. We finally broke above it, 4.521. We broke out, and we just did a rise trade, closed by the end of the day. Just a very simple rise trade for the price to close over a 4-hour period once it broke out, for the price to be higher, and that worked out very nicely. One of our top trades of this week on natural gas. What we will be focusing on, we'll be looking at the natural gas index. So we'll, of course, look at the correlations. We'll look at Brent, WTI oil as well. Now, due to this time of the evening, we're now 7:07 GMT. I'll see if there are any natural gas contracts available to trade at this time in the evening. It does tend to be open during the UK market hours, so that might not be available. But if not, we'll take a look at tomorrow, what we could have installed tomorrow and into next week. And do join us for Commodities Corner tomorrow, and we will also take a look at any other trade setups which are on the commodity side starting to line up this evening. So very simply, we'll look at the rise and fall type of trade. So we're going to look at rises and win the payout if the market exit price is strictly higher than the entry price on binary.com. And if you select falls, you win the payout if the market exit price is strictly lower than the entry price. So very straightforward indeed. So let me move you over. We'll have a look at some live technical analysis and trading. Move you over to my charts. Bear with me as I do this. Okay, good. You should now be able to see in the background there we have natural gas, and also we want to, first of all, we're going to go across to sectors, and we will be looking at the energy sector, and natural gas index is the one we want. Let's just see if there's any contracts available now. We may have. Oh, good. Okay, that's very good indeed. The natural gas index is. That's start time tomorrow. That's why. Yep. So that's the start time of tomorrow. Okay. Yeah. So it is closed for today. I suspected so. That's fine. So for the time being, what we'll be having a look at is we'll be looking at natural gas, and we'll be just taking a look. First of all, I want to talk you through the weekly view here. So on the weekly chart, I'm just going to zoom out a little bit for you here. On the weekly chart, you can see that we've been very much in an upward trend since around about September time here. So we've had a large move to the upside. In fact, I can even move this Fibonacci now just to where we've had the breakout today. So since September, as we've gone into the winter season, we've had this huge breakout here on natural gas. So we've really been able to take advantage of some very good moves to the upside. For those of you who've been on our weekly commodities corner, you would have seen some of the breakout trades that we've had over the last couple of months or so during this period of natural gas really being in an uptrend. So we had a nice break above a key Fibonacci level just yesterday. Just make that a little bit clearer for you. So this is where we had the breakout. I'm going to screenshot and just show you this. And it's been pretty big. We've followed through today as well. So this was the key resistance level that we were looking for natural gas to break out from 4.508. And this is where we broke out yesterday. We had a continued breakout today, and then we had the natural gas storage inventories, which have caused the move back down. So we're getting a bit of a pullback at the moment. Very interested to see actually how this candle closes today on the daily time frame, because that could lead us for a nice setup for tomorrow. So you can see here where we've got an overall very much a strong uptrend here on natural gas. We had a pullback just towards the 50-day moving average at the beginning of the year, which was just right at the beginning of January. And we were supported there also by a key Fibonacci level at 3.985, and we've since had a nice rally to the upside. So let's go and take a look at the 4-hour time frame. So the 4-hour time frame at the moment, in fact, we'll go into, let's just have a look at the hour time frame as well. We're definitely getting some consolidation here on natural gas at the moment. We pulled back today to 4.74. We're going to be very interested to see this daily inverse hammer to see if that gets confirmed to the downside tomorrow. So if you join us for Commodities Corner tomorrow, that's going to be at 12:30 GMT. We'll see if there is a live setup on natural gas tomorrow. We've had some really nice breakouts this week, but the natural gas inventories which came out today have caused a pullback. So next thing we're going to look at, we'll come back to natural gas, is I want to cast your eye over to crude oil. So Brent crude oil has had a wonderful breakout this week. If you go onto the weekly chart, you actually see how we came and found support at a major trend channel here, which has been in place since June 2012. So we had a bounce, second bounce, third bounce. We bounced off it just last week on the weekly chart, had a really nice strong hammer. We broke above 107 this week, and we've had a really nice opportunity to trade the breakout on both Brent here and WTI as well. Brent actually lining up quite nicely on the daily. That looks like it's going to be ready to trade tomorrow. WTI at the moment is actually in play, so we can take a trade on WTI. It's just broken out again today. This has been a fantastic trade, and for those of you who follow seasonality, Brent and WTI crude oil tend to break out in January through to February as well. It's a very seasonal, it's a bullish time of year in terms of seasonality. So we've followed through again from the weekly time frame. We had a major trend line. We found support at major Fibonacci level, closed with a nice hammer on the weekly here, the weekly chart. We're continuing to break out on the daily. The crude oil inventories today were pretty much neutral. There wasn't really a change in the amount of storage. The crude oil inventories came out today as opposed to a Wednesday because there was a bank holiday in the US on Monday. So we had the crude oil inventories come out today at just a little under 1 million in terms of minus 1 million in terms of barrels in inventory, and they predicted 500,000, a deficit of 500,000 million barrels. So it was close to what was predicted. So technically speaking, we are still on a breakout here. We broke above. In fact, we did our live trading room this morning. This was a setup which we traded. Had a breakout above 97.18. In fact, we've gone the 4 hour. We're stalling a little bit for the day, but there's really nothing to stop WTI from getting up to the next Fibonacci level here at 98.74. So daily is looking pretty bullish, and we're quite likely just to have a continuation of momentum through till tomorrow. There's nothing, if you look previously on the chart, there's no really key levels here where you would expect the market to stop. It's probably going to continue here. Might not do it. Probably won't do it today. Could do it tomorrow or into Monday. We'll come up to 98 to 99, 98.74 to 99. If we can trade that through an index, I'm happy to trade it. Otherwise, if we can trade it now, otherwise we'll do the trade tomorrow on the commodities corner. Let's just take a look. Crude index, is it open now? Crude index is closed. Let's just go to commodities oil, see if we can get any contracts. That's good. We can get a contract. So we go for a 1 day contract here. You've got 12 minutes left to take any oil trades. This closes in 12 minutes time, 7:30 GMT. So oil, I'm going to go for a 1 day contract here on oil, and for that to be higher than spot price, so I'm going to trade it through Brent. This is Brent oil, 107.75. Get best price, I'm going to trade the correlation. 1 day, so it needs to be above 107.75 by the close of tomorrow. 88% payout here on Brent crude oil. So 1,332.86 is the deposit for 2,500 payout. I'll just bring the Brent contract, the Brent chart back. So bullish candle here, closing on the daily. Actually, it's a better price than we've got on WTI. We've finally got above this key moving average here, the 200-day moving average. All the MAs are crossing above. We've broken through key Fibonacci levels. It's looking bullish for Brent as well. So I'm very happy to take that. And I'm going to take it. Okay, good. That's been executed. So Brent crude oil looking good here. So hopefully you will see that natural gas broke out this week. Brent crude oil broke out this week. WTI crude oil broke out in a big way this week. I hope some of you caught that move to the upside. So we've got a lot of correlation there with the three energies. I could leave it at that, but I won't leave it at that. We'll go and have a look at some other correlations. We'll take a look at some other commodities which are looking very interesting today. We'll take a look at gold. Gold, actually, take a look at gold on the weekly. Gold looks very interesting on the weekly. So we've got hammer after hammer after hammer after hammer. We finally want to break. We look like we're about to break through this downward trending trend channel on gold. Can you see that? Hopefully you can see that very clearly. So gold looks like it's going to be on now for a breakout. So you can see 4 very bullish weeks here. And again, with gold, if you've been on our end of year webinars, we discussed the January effect that you get with gold. We saw that capitulation in the beginning of the year. So the last day of the month is where we bottomed out. And we've certainly seen the January effect, this rally on gold. And gold's looking really strong tonight. Closing in its daily highs. It's broken through a Fibonacci level, 1261. It did have a pause this week. We came down, paused at 1231 just this morning, and we're having a huge surge today. So based on the momentum here, it looks like we're going to finish strong at the moment. Most of the move has occurred already here on gold, but if we look at the weekly, we can see here that clearly we're going to break out of this downward trending trend channel here. So all I'm going to do on gold here is, again, I'm going to go for a contract on gold. You just got to decide the time frame. You can see how strong the 4 hour is today. We're getting a massive rally. And by the way, the US dollar index is getting hammered. This is the US dollar index. The US dollar index moves the exact inverse to gold and silver because gold and silver, the way they're traded on the majority of platforms and traded on binary.com, they're priced in US dollars. So if the US dollar goes down, gold will go up. So US dollar got a battering today. A lot of financial news came out today. And the US dollar, you can see it's had a huge pullback today. In fact, to see how many points that was, over 84-point move to the downside. On the weekly here, we've done a bit of technical damage here on the US dollar index. So we could be ripe here for a breakout to the upside for gold ahead of FOMC next week on Wednesday. So I'm just going to take a trade on gold for it to finish. You can join us for tomorrow as well for Commodities Corner, and we'll take a look at how gold is performing. But I'm also going to put a trade on gold for it to be above this spot price tomorrow, 1264.43. We're getting a breakout. We've just broken out the downward trending channel. And I'm going to take that. That's 71% payout. It's fine. Okay. Good. So that's gold. Let's take a look at silver. Silver not doing as well. Silver has to break out of this downward trending channel. We've been in a downward trending channel on silver. Let's just make that a little bit clearer. Since August 2013, where we had the spike, we came up to just under $25 an ounce. So here you go, perfect downward trending channel. Can silver get above it? Well, it came and tested that level again today. Didn't quite manage it. If we can get a breakout above that, we'll monitor that tomorrow as well. That's going to probably what we'd be targeting here. We've got a whole cluster of resistance here around 2040 level, but if we can break out above that, we'll be looking at 2083, and then just be looking at the next key resistance levels, 2164, 2225. So silver not looking as interesting as gold here, getting a bit of consolidation. We've come up and found resistance again at that downward trending channel. Australian, so silver, we know there's no trade on silver. Gold looks very interesting though. Australian US dollar, heavily correlated with commodities due to its exports. Look at the weekly. Actually, I'll take you to the daily. We've broken down below 3-year lows today again. So Australian US dollar technically looking very weak. Really, you want to sell any rallies at the moment on Australian US dollar. So I hope some of you caught a bit of action. Yesterday we had, if you trade Australian US dollar, we had a rally this week during the CPI when it came out on Tuesday night in the early hours, 12:30 a.m. GMT. And we had a rally just beyond 0.88658 and see beyond that fib. Then we had some sell short opportunities when it just had a failed break there, a failed move to the upside, and we've just since been able to take advantage of this short. There are some 4-hour setups starting to develop here. Nothing really on the daily, just looking pretty bearish. So we'll await for tomorrow. Again, we'll review that tomorrow on Commodities Corner. Nothing really to be done right now. Most of the move has occurred for today. Copper, we've got a nice downward trending channel on copper as well. So copper got a hammering today too, broke through major support. You can see it's coming down. Again, it's found a little bit of support at previous key level here, which is a 3.28. You can trade copper as well through the sectors on binary.com. Just go to metals, go to the copper index if you don't have copper available. We've not traded it before. Very easy. Go to the metal sectors, go to the copper index, and you'll be able to trade that. It's closed now. The actual index will be open again from tomorrow. Just to see what time it closes. Oh, we can take a look at that on tomorrow's Commodities Corner. But copper, the market is closed for the time being, but we've had a nice breakdown on copper today. We'll see if we get a continuation tomorrow or if we find some support around this 3.28 level. Copper are very tradable as well. Tends to lead silver as well. So if we're getting a breakdown here in copper, we'll see whether we find support. And if we get supported, whether we get a move back towards the upper end of this this downward trending resistance channel on copper. But we've definitely had a nice sell short opportunity today. We want to see if we get supported or we get a further breakdown. Okay, so really the best trades at the moment being both gold here and also Brent and WTI. Both of those looking still very strong. Let's just bring you back to natural gas again, and we will take a look. Wow. Okay, I like that. Natural gas on the daily forming a huge, big inverse hammer. So this is a very strong price rejection, 4.936 on the natural gas inventories which came out today. Actually, can you see that image which just flashed up? That was how the price looked. It's gone away now. Not to worry. That's how the price looked about 5 minutes ago. So we just had quite a big sell-off in the last 5 minutes or so. Let's just have a look at this. Okay, so for those who can join us for Commodities Corner tomorrow, we'll take a look at this for a setup. We'll see if it pans out. This is the inverse hammer that we're getting at the moment on natural gas. We want to see whether we're going to see the market just come down tomorrow and retest 4.508. Could be that it just does a retest before going higher here, but that's an indication that we might just reach the top for the time being. We've probably seen a lot of profit taking, and based on the natural gas storage inventories, we're seeing some profit taking. Should we short it now? No, don't short it now. I want to wait for confirmation at the moment. We've got about what's time now? 7:30 GMT. So we've got about 4.5 hours now until the daily candle closes. So we want to see how natural gas will close on the day. We have had some sell short opportunities over the course of the day today. We'll see if we get more tomorrow. You can see we're just working our way down at the moment with natural gas. Anyway, you can't trade the natural gas index right now anyway, it's closed. So we'll wait for tomorrow. So we'll see what trade opportunities we have on natural gas tomorrow. So in summary, natural gas, we'll wait for tomorrow. US dollar index hugely bearish today, created some very good buy opportunities on gold. Over the course of today, we've spiked up with gold, and there's an opportunity to trade potential breakout at the moment too. We're just breaking out really above major resistance here at 1261 within the last couple of hours or so. You can see how strong the move has been. So we've broken out of a very important downward trending channel on gold. So keep an eye on that one. Looks like a good breakout. Brent and WTI look good for continuation at the moment until tomorrow for continued breakout. And we'll come back and we'll take a look at Australian US dollar, copper, and natural gas and silver on tomorrow's Commodity Corner. So let me bring you back to the main presentation. So what are the advantages of fixed odds trading? Okay, so you might be trading, using a platform like the MetaTrader platform at the moment. Well, the main advantages really of using fixed odds is that it's your return on time invested. Because these sort of trade setups, you put a trade on, you don't need to manage a stop loss, you don't need to manage to take profit, and the trade only needs to move 1 point in your overall direction, you win the entire trade. So you don't need to wait for your trade to hit a 1-to-1, a 2-to-1, or a 3-to-1, and so on. You just need the trade to finish 1 pip or 1 point higher. So there's a big advantage of that. You do now have exposure to a lot more markets that you might not be able to trade normally through the indexes. So you've got the copper index, you've got the natural gas index, you've got the crude oil index. You've got a lot of different agricultural indexes on there, a lot of different energies, and which you don't have access to without having to pay big spreads on other brokers. Another big advantage. You can make big gains, of course, on small moves here. You decide how much to invest. You know exactly how much profit you'll make, so you're not going to be tempted to muck about with your trades, move stop losses, move take profits, and just tinker with your trade. Once the trade's done, it's set, so you just let it do its thing. You can make money at any time, yes, of course, from anywhere in the world. All the profit you make, this is important, is 100% tax-free with binary trading, which is a very valid point here. And how can you get started right now? Well, you can use the following code 11121F20. That gives you essentially £20 or $20 trading credit. If you've not had that already, some of you may have had that already. You can only have it once. But if you've never had that, do take advantage of that. It's risk-free trading, $20 or £20 bonus. To get that, you just go to binary.com, select sign up, open real money account, enter bonus code 11121F20 as a reward for being on today's webinar. And of course, for those of you, and some of you have taken us up on this, if you would like to find out more about how to gain access to the Gold and Silver Club exclusive trading community of our international traders, where we've got live trading rooms hosted during the week. You can also find out how to join our exclusive members forum and find out more about our Gold and Silver Club, Gold and Silver Mastery workshops. You can find out more about those just at www.jointhegoldandsilverclub.com, or just go to our website, thegoldandsilverclub.com, and you can find more information there too. Or if you prefer to email, it's just office@thegoldandsilverclub.com. Or you can also call us on one of our international offices, either our London office, 0207 193 0403. You can call us in New York, +1 646 808 0403, or our Johannesburg office at +27 11 083 8403. And of course, just make sure you also take advantage of our newsletter. So with that, you get free weekly gold, silver, oil, natural gas and copper news, as well as commodity currencies, live market analysis, invites to exclusive webinars. So you can take advantage of that too, and you'll find out more about upcoming binary.com webinars too. Fantastic. So it's good to see lots of old and new faces on the webinar. So if it's your first time on one of our webinars, welcome. And if you've been before, good to see you back here. Do join us tomorrow, 12:30 if you can make it. We'll be on the Commodities Corner. We'll be also having a look at how things develop from today through till tomorrow, and we should see some interesting moves certainly in the commodities markets by then. Okay, so yeah, good stuff, Ricardo. I'll see you on there. So with that, guys, have a great evening. Good luck with your trades, and we'll see you on the next one. Okay, take care, everybody. Cheers. Bye-bye.